Hello everyone, this is Andrew McNair from SWAN Capital with our January 2013 Stock Market and Economic Update. After a tough December, markets were on a bull run for most of January, with the Dow achieving its strongest January performance since 1994. And we're finally hit that 14,000 ceiling that we've all been waiting for since the markets crashed in 2007. So for the month, the S&P 500 gained 5% and the Dow gained 5.8%. And the NASDAQ dragged behind with 4% earnings. After a lot of debate, lawmakers were finally able to come to an agreement to avert the fiscal cliff on January 2nd. While we're very happy that the fiscal cliff is no longer hanging over our heads, we're disappointed that lawmakers couldn't come to terms over spending. Go figure, the government, right? Instead, by temporarily suspending the federal debt ceiling, they postponed a critical element of the debate. Also, if you want some more information, check out our white paper on the fiscal cliff, and you can download that on our website as well. Also, January kicked off the earnings season with the release of the fourth quarter earnings reports from the major companies. So far, the trend has been just good enough. Not bad, but not good, but not awful either. Total earnings for the S&P 500 companies already reported that they're up 2% over the third quarter, meaning that companies are doing better than they did last year. Even better because executives are upbeat about the future and the business conditions that are upcoming, meaning we may see improved performance in the first quarter. The last week of January saw a flood of economic data. A couple of highlights for you. The U.S. GDP contracted in the fourth quarter by 0.1%. Now, while a lot of people were pretty worried about this, economists believe that this number is artificially low because of some unusual factors, including lower defense spending, increases in consumer spending, and construction, and business investments. The economy is still on a moderate growth path, but January's final consumer sentiment number beat expectations, as consumers regained confidence that was lost in December's fiscal cliff debate. But people are still worried about the new tax increases. Also, the latest unemployment numbers show that unemployment rate ticked up to 7.9%. However, economists are revising their 2012 employment numbers as more jobs were created than they originally thought. Although we're pleased with January's market rally, the ups and downs are normal part of any healthy market, so we won't be surprised if we see a retreat in the near future. We're also hoping that lawmakers start discussing their ideas for reining in government spending, and hopefully they'll do it pretty soon before we have another crisis. As always, we'll keep you updated. Also, we have a lot of upcoming events in the life of our firm, so please check out our events page on our website at swan-capital.com. Once again, this is Andrew McNair with SWAN Capital, signing off for this month's January 2013 monthly market recap. I hope you found this commentary interesting and informative. And if you have any questions about what you heard in this update, or would just like to discuss your personal financial situation, please give us a call at 850-380-958. We'd be happy to talk with you. And that's it for this month's SWAN Monthly Market Recap. Have a wonderful day.